This is Matthew Cratter from Trader University, and today I want to talk a little bit more about GameStop and what's happening with the stock and regulators and what I think is going to happen today. This is a very, very dangerous position. If you are long this, I believe you're about to get crushed. I talked a little bit in a previous video this week about what's really happening with GameStop. We can see that it's soared. Yesterday closed around 350. Pre-market today, it was above 500, and it's imploding as we speak, down to 283, down about 18%. Now, the two things that were driving this had nothing to do with the fundamentals of the company. This was a very technical thing where you had a massive short squeeze, where all these hedge funds were, especially Melvin Capital, were short the stock, and a bunch of Wall Street bets, Reddit traders got together, and Robinhood traders pushed it up, squeezed them. And when you have a short squeeze, those who are short the stock may eventually be forced, either by their investors or their prime brokers, to buy back the shares to cover their shorts. This drives the stock even higher. GameStop had a massive short interest. It was something like 120, 130% of the shares outstanding, or actually the trading float. So you had a massive short squeeze. You had a massive gamma squeeze as well, where when you have a lot of retail traders or anyone really buying call options, the dealers have to hedge that by actually buying the underlying stock. As the stock goes up, these dealers will buy more and more stock to delta hedge their positions, and that exacerbates the cycle. That causes more of a short squeeze. As the stock goes down, conversely, they need to dump their stock. So it really exaggerates the movements. What happened yesterday was really quite unbelievable. We began to see a spike in all of these different stocks that were being targeted by Wall Street bets, particularly stocks held by Melvin Capital. So BlackBerry was soaring, AMC, Bed Bath & Beyond, etc., in addition to GameStop. And then something else happened which was very strange, is that a lot of big tech positions began to sell off. We had a big sell-off in the NASDAQ, and we also had a very large spike in the VIX. I don't think a lot of people realize what was causing this spike in the VIX and what sort of underlying storm was being caused by the unwinding of these positions. So you have a category of hedge funds. I'm going to talk about the drivers of why we were getting a spike in the VIX, in addition to these highly shorted stocks rallying. You have what are called long-short equity hedge funds, where you basically smooth out market volatility, the normal volatility of the stock market, by having some shares of stock that you're long and then some other companies that you're short. They'll often size it in something like this, where it's called a 120-80 fund, where you are long 120% and short 80%. And if everything works out well, you can make money on your longs if they go up. And if your shorts go down, you make money on that. The way this would work is if you're managing $100 million in your hedge fund, you would be long $120 million worth of stocks. In this case, it was probably some sort of tech stocks, very popular, crowded trades. And you would sell short $80 million worth of stocks that were clearly going to zero. Businesses like AMC, GameStop, in spite of the board change at GameStop, etc., these are companies that have fundamental problems in the new world, certainly in the new pandemic world. And so what happened yesterday is that these equity hedge funds came under a lot of pressure. And what happened is the short side of their books went up so much that they were forced to start to sell the long side of their books. This is one reason we saw such a big sell-off yesterday in S&P 500 stocks, in NASDAQ stocks, and why we saw these most heavily shorted stocks rallying. This becomes dangerous to the whole financial system if you get contagion from it. So there may be just a few hedge funds, large hedge funds, mostly out of New York, who are all positioned the same way, and they need to start unwinding. And so they start covering their shorts, as Melvin Capital did, I believe, on Tuesday afternoon, and they start selling their longs. As they sell their longs, the stock market falls, and people have to start buying put options to hedge their positions. people begin to panic and we move from a situation of a lot of greed to a situation with a lot of fear. That's one main reason we saw the VIX spike so much yesterday. There's this actual technical unwinding happening. You also have quant funds that are positioned this way. And when you get these massive moves, everyone starts to need to adjust their book. And they usually have to adjust it in the direction such that it will exacerbate and make worse whatever is already happening. So we had a lot of shorts who had to buy GameStop and drove it even higher. Now, what happens is at a certain point, hedge funds start complaining to the regulators. I love this meme. Daddy said, only I can manipulate the stock market to make millions for myself, not you. And what we're seeing now is another sign of the end of free markets in the U.S. No one really cares that a bunch of hedge funds are losing billions of dollars and that they don't know how to manage their risk. Ironically, they're losing a lot of money because of the bubbly environment created by the Federal Reserve. But hedge funds, regulators, the Federal Reserve are all buddies. And so what we're seeing this morning is an attack on this. I like this tweet from Ben Kaufman. We must do a 2 weeks finance lockdown to stop the spread of profits outside of Wall Street. NASDAQ CEO, NASDAQ is the big stock exchange where most of the tech stocks trade. NASDAQ CEO suggests a halt to trading to allow big investors to recalibrate their positions. This is just absolutely outrageous. This shows how far the corruption is spreading. Just because you have some large hedge funds that are losing money, it's outrageous to do what they're doing now. Cash App is not letting you buy GameStop or AMC. Robinhood's not allowing you to do this either. If you want to know really how this system works, you can tell who gets, I don't want to use a word here that's going to drop me in be censored by the algorithm. But basically, Wall Street doesn't care as long as the retail investor is losing money. But once the big guys start losing money, they complain to the regulators and the regulators step in. There is no real structural problem here. This is a temporary technical unwind. And the fact that some people got themselves in bad positions, it really is their problem. So my compliments go out to Wall Street bets. But that being said, if you are long GME, this is an incredibly dangerous position. This thing will probably go back down to the single digits unless they're able to raise a lot of capital and convert this high-priced stock into cash in the bank. I don't know how quickly they can do that or whether they're capped at 100 million. This was a very cool game that Wall Street Bets played, but I believe it's over once you stop the inflows from retail investors in places like TD Ameritrade, Schwab, Cash App, Robinhood. Once the flows stop, this thing will massively reverse as it appears to be doing right now. That being said, you also don't want to short it. Shorting can get you probably can't even borrow the shares now. Buying puts on it is going to be very difficult because implied volatility is very high. These kind of stocks in this kind of market, it's like watching a big wave surfing competition. There's no reason ever to get in the water unless you are also a professional surfer. If you're long GameStop, if you're short GameStop, you're playing a very, very difficult game, especially given the fact that there can be these trading halts that your broker can not allow you to buy or sell at their discretion under pressure from regulators. We're already seeing that not just Melvin Capital, but other hedge funds are down. A lot of hedge funds that are positioned in the same way. Candlestick Capital down in the low to mid-teens. Maple Lane down about 45% for the year, which is pretty brutal for for institutionally managed money. I do have a message for Wall Street Bets though, and I know you guys are going to figure this out. If you are tired of regulators coming in and shutting you down and telling you can't play this game because you might hurt some billionaires, you should check out something called Bitcoin. There are no trading halts. The whole world is structurally short, and no matter how high it goes, there are so many hardcore hodlers in this asset class, including myself, that we will never sell. If you think the GameStop short squeeze was a massive short squeeze, a much, much bigger one is coming, and that's going to be Bitcoin. especially once these guys at Wall Street Bets discover how manipulated, how unfair the regulators are to retail investors. They're going to move into cryptocurrency, which probably will be very good for the altcoins as well. And I think it'll be especially good for Bitcoin because Bitcoin has that true scarcity and that true max supply at 21 million. So again, congratulations to Wall Street Bets. Shame on you, regulators. These things are becoming more and more blatant and just unbelievable. I can't even believe what America looks like in 2021. So Wall Street Bets guys, check out Bitcoin. This is the place. Cryptocurrencies is probably the place to play if you want to cause a massive short squeeze and not get shut down by the regulators. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.